Bloomberg World Headquarters in New York to our TV and radio audiences worldwide. I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. On a special edition of Balance of Power, we start today with a one-on-one conversation with Larry Culp. He, of course, is chairman and CEO of GE. So welcome, Larry. Really great to have you here.
Thank you, David.
So you had a big investor call this morning, and we've heard some of it. You didn't make really fundamental changes in your forecast, but for Q1, first quarter, you did say you're going to get hit by the coronavirus some.
We did. What we took the opportunity to do this morning, David, is bring the entire leadership team in and to really flesh out our framework for 2020 that we hinted at the end of January during our fourth quarter earnings call. Good opportunity for investors to hear from the entire team with respect to how we're approaching 2020. Basically, what we said was that we're reaffirming our low single-digit organic growth guidance for the year. We see margin expansion somewhere in the 0 to 75 basis point range. And we think we're going to see $2 to $4 billion of free cash, which is a nice uptick from where we were a year ago. We also highlighted that guidance incorporates what we're seeing in the wake of COVID-19 or the coronavirus here in the first quarter, but we really didn't take a view with respect to the rest of the year, simply because what we don't know more than outweighs what we do know. But what we do know relative to the first quarter is we're going to see roughly $300 to $500 million of free cash headwind, probably $200 to $300 million of operating profit pressure because of the effects of the coronavirus, principally in our aviation and to a lesser degree our healthcare businesses.
So I certainly understand and respect the fact you can't look into the second quarter. I mean, right. The scientists can't tell us right now where this thing is going. We don't know. At the same time, if you kept the basic structure for 2020, does that suggest that you do believe we will get through this in the course of 2020, whether it's in the second quarter or some other time? Do you think this will not have a lasting, permanent effect on GE's business or the economy overall?
Well, again, I think what we don't know outweighs what we do know. But that said, I think our view is that this in all likelihood will be temporary, but that doesn't mean it's going to disappear tomorrow. So we didn't want to take a view with respect to the rest of the year in that regard. We're going to run our business accordingly, making sure we're first and foremost focused on the health and well-being of our team, be it our team in China and now our team around the world, working as closely as we possibly can on a day-to-day basis with customers and suppliers as we tend to their needs and ramp our own production and work with our suppliers to keep pace. So we know that we have this near-term pressure largely because of top-line changes. We've seen air traffic come down materially in the Asia-Pac region, certainly seeing pressure as well with elective procedures being off, impacting our healthcare business. How this plays out over the rest of 2020, we'll see. But I think our view is that hopefully we will look at in the rearview mirror relative to the coronavirus effect as we get into the later part of this year and into 21.
So we always want to say this is first and foremost a human tragedy. We want to recognize the fact there are a lot of people being affected around the world, including your employees at GE. At the same time, there are economic effects. You mentioned the aviation effect as being one of the big drivers of taking down some of the free cash flow as well as profitability in the first quarter. How much of that is because of aviation, and more specifically, how much of it is because of services and parts as opposed to really new orders?
Well, first off, there's no question this has been a tragedy of significant proportion. David, I've been particularly proud of our team in China. We have a large installed base of equipment in our healthcare business there. Our CT scanners are very much an important part of the first line of defense on the part of our healthcare provider customers. So our service technicians and engineers are in those hospitals in Wuhan and elsewhere, really around the clock, supporting the efforts to contain the virus. In turn, our factories were open throughout the Chinese New Year, really running 24/7 to keep pace with the additional demand. So there's no doubt that we have seen this up close, and I'm pleased that we've been a part of the solution. In terms of the impact, again, it really is very much a function of reduced flights. A good bit of our aftermarket business is driven by how many hours a plane will be in the air, and as we've seen in China and throughout the region, as those hours have come down, that's put the financial pressure on the business.
As you suggest, you've got a fair amount of presence in China. We're all trying to figure out, the entire world's trying to figure out what comes next. How fast do we bounce back? Have you learned anything from your experience in China, because they obviously are ahead of the rest of the world on that, about how fast we can come back with our plants, with employees, with getting back to work?
Well, we're getting back to work in China, and I'm encouraged by what we have seen in that regard. We have 18,000 people in China. All of our major businesses have significant manufacturing footprints there. With the exception of a handful of facilities that we have in Wuhan, we're open for business. Now, that doesn't mean we are at full capacity at this point, but as people are coming back to work, we are ramping, and I think on average our facilities are at 75 to 80%, depending on the day, of required staffing. So that's an important factor for us, as is the improvement in the return to work on the part of our suppliers.
We are seeing a big effect in the markets, including with the Fed cutting 50 basis points, which really has driven, for example, we've got yields on the 10-year down below 1 now, as a practical matter. How does that affect your business? Because you've got things like pension liabilities, you've got some insurance liabilities, and interest rates do affect your business. Does that require you to reset where you are in 2020?
Right. Well, we didn't reset today, again, mindful that we don't know a lot of how things will play out during the course of the year. I think with respect to our business, with $405 billion of backlog, being a long cycle business tied to key infrastructure in aviation, healthcare, and energy, we feel good about the bedrock of the business in that regard. But we do know that the rate activity here of late in particular will put some pressure on us over time. Our pension obligations, probably where we see, David, the most direct impact. For every 25 basis points of pressure, our pension obligation increases $2.3 billion. Now, that's not something we mark every day, of course. That's an annual adjustment that we make. So let's see how the rest of the year plays out. But as we think about the deleveraging and the dramatic progress that we made during the course of last year to bring leverage down both on our industrial balance sheet and at GE Capital, we're poised to continue that progress, mindful that the rate action could be a variable as we play through the rest of the year.
Tell us about power. That's been a challenge you took head on when you went to General Electric. You took it head on. Where are you in power? Because you report you lost some in 2019. You say it's going to be better, but probably still negative 2020. 21, you actually are projecting you're going to make some money.
We did. And I think this morning, both Scott Strazik and Russell Stokes, the two CEOs who look after our power business, did a really nice job talking about what they're doing operationally to drive better performance, not only in terms of safety and quality and delivery for our customers, but how that reads through to investors in terms of our financial performance. There's no question that what we're doing is taking a more disciplined approach to underwriting new transactions. We are executing in the field, both in terms of new equipment installation and the service of that equipment in a more disciplined, more rigorous way. That's good for customers. That's good for investors. And that's coupled with really the runoff of a number of what we call inheritance taxes. We had about $1.7 billion of cash out the door last year that we expect to trickle down over the next several years and basically reach a immaterial level by 2023. That really sets the stage for us to have positive cash flow in power and high single-digit margins, as we outlined this morning.
How confident are you in that positive number in 2021? And for that matter, let me push you further. Is there any chance you could slip over into positive even in this year?
Well, I don't think we would have put it on the slides this morning, David, if we weren't confident.
So you're pretty confident?
But we have work to do. It is not in any way a gimme at this point, but I do have a lot of conviction, as do Scott and Russell, that they and the teams can get that done. Might we get there early? Let's see how the year plays out.
Okay, fair enough. I don't want to let you go without talking about the passing of a legend, not just a GE legend, but a corporate legend more generally. Jack Welch passed away this week. Give us a sense, as you've taken over GE, how much of Jack Welch's legacy remains at GE even today with all the changes that have happened?
Right. Well, David, it was a sad morning for us in Boston, no doubt, on Monday when we heard the news. Clearly, Jack is a presence not only at our company, but really the world over that I think few could rival. Our condolences are out to Susie and the family, of course. The service will be here in New York tomorrow. I think Jack, and you're talking to a huge Jack Welch fan from way back, right? I think Jack's legacy here will go on for decades. His focus on talent, the way he pushed our company to globalize, his emphasis on not only manufacturing new equipment, but servicing it and using that to get close to the customer. And those are really the hallmarks of GE in many respects today, just as they were in his time. So as we move forward, I think the GE team today is very committed to making sure we honor Jack and his legacy with better performance over the next many years.
Larry, thank you so very much for spending time with us today. Really appreciate it. That's Larry Culp. He is GE CEO and chairman. And now it's time to get a check on the markets, and for that we turn to Abigail Doolittle. Abigail?
Thanks so much, David. And we are looking at a bullish rebound for stocks after yesterday's sell-off induced by that emergency cut by the Federal Reserve of 50 basis points. And interesting today, we have pretty strong economic data here in the U.S. Mortgage applications last week rose in a big way, I believe up more than 20%. So low rates should even help that more. The ISM services was strong. So you can see stocks are higher. The S&P 500 up 1.8%. Off of the highs, but nonetheless a nice gain. The Dow Transport's up a little bit less, up about 0.5%, but again, a bullish feel for stocks. Interestingly, though, if you take a look at crude oil, down 0.9%, so a divergence there between risk assets, that suggests that there could be more volatility ahead. Plus, we have bonds rallying once again. Take a look at that, really extraordinary. The 10-year yield trading at 96 basis points. Who knew? As for the S&P 500 and the technicals, really in a battleground spot right now. If we go into the Bloomberg terminal and take a look at a chart of the 50-day moving average and the 200-day moving average, we are going to see that the S&P 500 wrestling with that 200-day moving average, moving above and below it. It's unclear whether that will prove to be a V bottom or bearish congestion. There are some signs it may be bearish congestion more so, but wait to see. 3,000 is really a key level. Bearish also is the fact that the 50-day moving average, that near-term momentum rounding down, telling you that the near term, despite today's rally, is controlled by the bears. And then finally, David, a real bright spot on the day having to do with Super Tuesday and Joe Biden's momentum. Take a look at this. The S&P 500 healthcare index up 3.5%. The providers services index, though, up 7.5% at the highs, the best day since 2008. It still may very well be. And behind some of that strength, Anthem and Cigna Healthcare really getting a boost on the idea that Joe Biden may get the Democratic nomination over Bernie Sanders, who, of course, is supporting Medicare for all. Traders who invest in healthcare liking that on the day, David.
Okay, thanks so much to Abigail Doolittle. And we're going to talk a little bit about that because coming up, we're going to talk about the Biden bounce. The former vice president surprises the naysayers on Super Tuesday and gains the backing of a former rival with deep pockets. That's coming up next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. Super Tuesday lived up to its name yesterday, especially for the former Vice President Joe Biden, racking up wins in 10 of the 14 states and surging ahead of Senator Bernie Sanders in what has become really a two-person race for the nomination for the Democratic Party for president. We welcome now Bloomberg political contributor and former John McCain campaign manager Rick Davis, right here in New York again today after we were together all night last night. Right. So, Rick, news today. We have Michael Bloomberg, the founder and majority owner of Bloomberg LP, our parent company, with a statement today. He's pulling out.
He's pulling out, and he's endorsing Joe Biden. Yes. We've seen now since South Carolina, the coming together of the Democratic establishment, the center of the ideological wing of the Democratic Party, rallying around Biden's campaign, obviously adding a lot of power to his wins on Super Tuesday, and it isn't over yet. There are 1 week from now, a lot of very big and important states, and this endorsement by Mike Bloomberg will help a great deal in winning those states, too.
And it appears from his statements he's going to devote a lot of his apparatus and his money and things like that helping Joe Biden. He says, I'm not out of this. I'm still trying to get it done, as he calls it, and that is beating Donald Trump.
Well, he devoted enormous resources to a very short presidential campaign, but his data operations are the top of the entire Democratic Party. He has staff in all these outgoing states. Good example, Arizona. I was just talking to some of my friends there. Mike Bloomberg's got a full staff operation there with some really talented Democratic operatives, and Joe Biden has nothing. So this will enable them to sort of use some of those resources as we go along.
So if you're Bernie Sanders or you're his campaign manager today, how do you regroup? What do you do to come back? As you say, next Tuesday we got another big round of primaries.
Well, I think number one, they got to get Elizabeth Warren out of this race, right? I mean, she is getting at least 10% in all these states coming forward. of the vote that would likely go to Bernie Sanders. And so the best thing he can do for himself is to talk her out of running. She said earlier last night that she was going to stay in throughout, but recently
there's
there
an
may be a
email,
new email.
we were given an email that was circulating internally that said they're going to announce shortly that Elizabeth is talking to the team to assess the path forward. So it doesn't say she's getting out. Also doesn't say emphatically she's staying
Well, she's
in.
getting phone calls from everybody from the progressive left right now saying, you've got to get out of this race. You've got to rally around Bernie. It's a two-man race. And ideologically, they don't want to lose this to the establishment. And it'll put the progressive wing of the party behind the eight ball for a long time if they're not able to make this work. And she's the biggest obstacle to making that happen.
So put on your red jersey for a moment and play for the other side. If you're Donald Trump or you're his campaign staff, how are you looking at this race on the Democratic side? Do you have a favorite? Would you rather it go one way or another?
Well, they had a shockwave come to the Republican Party headquarters last night, and that was the enormous outpouring of support that Joe Biden got in the suburban community, mostly with suburban white voters. This is a soft underbelly to the Trump campaign. They had those voters when they beat Hillary Clinton. They lost them in the midterm. They've been struggling to find a message that can get them back, and Joe Biden saw them come en masse that fueled his election victory last night.
So at the same time, we've got critical states, northern Midwest states, Wisconsin, Michigan, Pennsylvania, we've talked about all along. We've not heard from yet. We'll hear from Michigan actually next Tuesday.
We'll hear from Michigan next week. We've got a couple of southern states, Missouri and Mississippi. Washington State will come in next week. So you got an interesting grab bag of states. And then 1 week later, you've got Arizona, Florida, Illinois, and Ohio. All four of those are important general election states. And so I think the next 2 weeks will probably define what happens in this election.
So let me pick on you on Arizona because you know that state so terribly well, having spent so many times in so many campaigns.
Terribly may be the right term.
No. Really, really well. You spent so much time there with John McCain in various races, actually, in Arizona. War game Arizona in the general. Is there a chance that could go for the Democrats?
Sure. I mean, Arizona is the classic sort of purple state right now. I mean, you had an influx of Hispanic voters. They now are over 20% of the voting age population. You've had a moderate strain of the Democratic Party start to win elections. Kristen Sinema in the United States Senate is a great example of that. And they have a very strong prospect to compete against the Republican senator from Arizona right now. So it looks like a challenge. Donald Trump only won Arizona by 4% last time when John McCain, who was also on the ballot in 2016, won it by 14%. So Trump has been underperforming that Republican ballot in Arizona quite a while. Obviously, his relationship with John McCain doesn't help the fact that, he needs to get those votes in Arizona. And right now, I'd say they're up for grabs. And those McCain votes may decide which way Arizona goes.
So finally, let me ask you the question that's unanswerable. Coronavirus, how it's likely to affect the political campaign. We talked about it a lot last night. If you were to guess right now, given the way it's developing, which way does it cut? For Trump, against Trump, for Bernie, against Bernie, for Biden, against Biden?
Well, right now, there's a mechanical piece to it, right? We were worried that it might somehow affect turnout last night. And so did people stay at home instead of go out to vote?
But it doesn't look like it did.
It didn't. There was record turnout in many of these states that we saw last night. So actually, it was a good news item for Democrats where they saw real intensity behind their voting bloc. Donald Trump has probably one great weakness as a president, and that is his lack of empathy, right? I mean, he does a lot of things right. He shows a lot of strength, but as good as his strength is when it comes to dealing with allies and enemies, his lack of empathy hurts him in dealing with his own population. And so what the coronavirus presents to him is a real dilemma, right, is that, it plays to his weakness. And he's trying to figure out, I can solve this problem. And it's not necessarily a solvable problem. It's a manageable problem.
Well, I wonder if it may be a weakness not to recognize there's a weakness. Because you want a president who exudes some confidence and we're going to be okay. At the same time, you want one who really understands the scope of the problem. And we have President Trump and some of his people around him saying, we don't think this is a real problem for the economy at all. We're going to be fine. We don't need to worry about fiscal stimulus, any of that sort of stuff. Could that come back and bite him if, in fact, it turns out we need help like that?
Sure. I mean, look, last week was arguably the worst week that Donald Trump has had in his presidency as far as the economy goes in general, and it's all informed by the coronavirus. So unless you get to the heart of it, how do you manage a big public health crisis in the United States and around the world? Because we play a role in ensuring that these things don't get out of control. You're going to leave yourself vulnerable. Remember what George Bush went through during Katrina. It was his moment, and he left office a very unpopular president, by and large because he could not understand and empathize with the people who are subject to those kinds of natural disasters.
Really important point. Okay, thank you so very much to Bloomberg contributor Rick Davis, right here with me in New York. And a headline just crossing the terminal, it's a red headline, that Italy is going to close its schools until March 15th due to the coronavirus outbreak. That is coming from Italy's education minister, a big development on coronavirus. And we're going to talk with the managing director of the IMF, Kristalina Georgieva, about the fund's increasingly pessimistic outlook on the coronavirus. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. It is time now for the stock of the hour. Health insurance stocks are leading the S&P today after Joe Biden's strong Super Tuesday performance. United Health is among the best performers, rallying about 9% and heading for its best day since 2009. And Kayla Lyons, of course, is here to tell us all about it.
Yeah, so going with United Health here, but I literally could have picked any health insurance stock. They're the top 5 performers in the S&P 500 today. Some of them, like Anthem, actually moving double digits. And it's really all about Joe Biden, the surprise comeback he posed on Super Tuesday, kind of implying to the market that the odds of Bernie Sanders becoming the nominee and thus his Medicare for All plan being a real threat to these private insurers maybe are a lot lower. Actually, when you look at it on a chart, you can track the odds of either Bernie Sanders or Elizabeth Warren winning the nomination. When they were high, these stocks were down, and they were down hard. Now that those odds implied by the market are much lower, around 20%, these stocks are surging. So you're really seeing it make a difference. And of course, it's not just the absence of Medicare for all, the progressive policies. It's what Joe Biden's policy actually is, because of course he is the vice president of Obama. He is for reforming and adjusting the Affordable Care Act, and for health insurers like United Health that actually are really tied to government programs, that could be a boon. United Health, yes, gets a lot of its money from private premiums, about 44% of its revenue, but 33% of its revenue comes from Medicare and Medicaid premiums, so it could get a boon from that.
And that raises the question, and we're way ahead of ourselves, it could still be Bernie Sanders running for president, no question about it. But if it were to be Joe Biden against Donald Trump, which would the health providers like more? Because Joe Biden does want an expanded Obamacare, whereas it's not that clear President Trump's a big fan.
Well, that's a good question. I think you can extend that question to the broader markets as well. Like, yes, the market seems today to like the fact that it may be more likely Biden than Sanders, but Trump as a second-term president wouldn't be too bad for the markets either. At least that's what's thought. Okay, thank you so very much to Bloomberg's Kayla Lyons. Up next, the head of the IMF is here to take us through their latest estimates on the fallout from the coronavirus. This is Balance of Power on Bloomberg Television and on radio. From New York, this is Balance of Power on Bloomberg Television and on radio. I'm David Weston. As we just reported, Italy will close its schools until March 15th because of the coronavirus outbreak. That's according to Italy's education minister. This comes after the International Monetary Fund held a news conference earlier today on its projections of possible economic fallout from the spreading coronavirus, saying that outcomes remain very uncertain, but it has seen what it calls a, quote, shift to a more adverse scenario for the global economy. We welcome now the managing director of the IMF. She is Dr. Kristalina Georgieva, and she's coming to us today from IMF headquarters in Washington. So, Dr. Georgieva, thank you so much for being with us. Give us a sense of what you are seeing that does cause you more concern than perhaps you had even a week ago.
What we are seeing is, unfortunately, we have moved to a more adverse scenario with the coronavirus spreading now in 75 countries, and the impact of the virus already being felt in the economy. We do expect that growth this year under any scenario would be below the level of last year. But as you said, there is a great deal of uncertainty about the longevity of the outbreak, and therefore we find it somewhat difficult to predict whether it would be a first, maximum second quarter impact, or it may spread a little further in 2020.
So, Dr. Georgieva, as I understand it, besides the news conference this morning, you also had a conference call of the 24 top central bankers and finance ministers. That includes, for example, Stephen Mnuchin, the Secretary of Treasury, Mark Carney from the Bank of England, and we had Madame Lagarde as well. What was the tone on that call, if you can describe it?
Very serious commitment to take actions in a coordinated manner. We heard from Secretary Mnuchin a strong emphasis on action, and that has resonated across from everyone. What was particularly important is that both central bank governors and finance ministers have shifted their attention to what can be done. And we prioritized actually collectively with a great degree of consistency, first, funding health systems to protect lives and well-being of people. Second, fiscal measures that are well targeted to ease the pain on most affected businesses and households. Third, a great deal of attention on liquidity, that we don't end up with a credit crunch, and also confidence that the financial system, having been built after the financial crisis, is actually strong. My take from the call is also that in China, the Governor of People's Bank of China, Yi Gang, gave us some good news of production in China stepping up to 60%, and expectations in the next week to go further 90%, obviously, with the objective of full recovery.
So talk about that quite specifically, because obviously the entire world wants to find out as fast as possible where this is going to lead. How much worse is it going to get? How fast is it going to bounce back? Are you seeing data out of China that you just referred to that may give you some indication of an answer to that question? There's this discussion about, is it a V-shaped recovery, is it a U, or even an L? Do you have data out of China that might give us some information about what might happen in the rest of the world?
We do have data from China that indicate three trends. First, that new cases are indeed dropping very rapidly. Second, that there is no second wave for now of an outbreak as factories start to recover. And third, that the measures that are put in place, they secure access to credit. There is no problem in China in that regard. And that there is a very strong confidence building throughout China. Of course, the country has been severely hit, and the expectation is growth this year would be way under our initial projections. Where exactly it would land is too early to say. And we also have to be cautious. Spillover impacts from China to the rest of the world have been felt. We don't yet know whether there can be another wave of that kind of impact back and forth. But with strong coordinated action in the world, we certainly would be in a better place. So the message from the call was act. Better to do more than to do less than necessary.
Well, maybe the Congress was listening to you, because as you were talking, there was a headline across the Bloomberg actually that said that, in fact, Republicans and Democrats have agreed up on Capitol Hill for a $7.8 billion emergency spending bill to fund the U.S. government's response to the coronavirus outbreak. So this is something along the fiscal lines of $7.8 billion being injected. Maybe it was along the lines of what Mr. Mnuchin was talking about on your call this morning. Will that be a step in the right direction?
It is definitely a step in the right direction. We do need to lift up the ability of health systems everywhere to accommodate a potential expansion of this outbreak. Health professionals are telling us, do it, better being safe than sorry. And we also do need to address in a very targeted manner these sectors, businesses, and households that are already feeling the impact of the virus, of the epidemics, but especially of the containment measures that are necessary to reduce its spread.
So let's talk about specifically what the IMF is doing. As I understand, there's a $50 billion that's been put into an immediate fund that we've divided between some of the lower income countries and the middle income countries. What will that money be used for?
This would allow countries to tap into financial resources immediately and then step up their domestic efforts, particularly important with countries with very limited fiscal space, those that may be exporters of commodities that are already hit by dropping prices, and everybody that needs an enforcement of their health systems. We make it available outside of the IMF, of an IMF program, meaning that on emergency grounds, countries can draw on this money if they need it right away for poor countries with zero interest rate.
So, Dr. Georgieva, you understand so well the way these economies work, particularly in the developed world, such as the United States. Are you concerned in particular about the small and medium enterprises? Because that's one of the things we're hearing right now, that when it comes to fiscal support, whether it's loans or outright grants, some of the things we have to be concerned about are some of the small companies, the small people who employ just a few employees. Who you might have people who have to stay home because their children are kept out of school, like we just talked about Italy, things like that. Should some of these fiscal resources be directed specifically at the SMEs?
I very much support that. We believe that measures for SMEs should aim to postpone repayments on credits, make sure that in a crunch situation there is financial capacity available for SMEs, and also that there are measures that help SMEs to support health costs for their workers. And all of this is particularly important in communities that may be more severely impacted by an outbreak.
So, Dr. Georgieva, sort of finally, let's talk about the coordinated nature of the efforts, because you've mentioned that more than once. It's important that the countries come together in a coordinated fashion. We know there was a G7 call yesterday. After that G7 call, the Federal Reserve Board, through Jay Powell, the chair, went out and it appears unilaterally cut the interest rates in the United States by 50 basis points. Was that consistent with coordination? Is there enough coordination going on around among the central banks and the finance ministers?
Well, let me first say that central banks are talking to each other and they're looking at, within their different situations, what they can do. There is constant connection among central banks and, of course, with finance ministers as well. What we recognize is that at this moment, countries are in a different place in terms of where the epidemic is. And therefore, some are more advanced in taking precautionary measures that respond to the crisis. What we want to see is us to serve as a transmission line of experience to accelerate good practice in response to the crisis, and also to make sure that we are bringing countries together on a very critical topic. We actually propose to build a global coordinating mechanism, so funding made available to buy medical supplies is coordinated with ratcheting up production of these medical supplies to make sure that we actually can act in a timely manner.
Dr. Georgieva, thank you so very much for your time today. That is Kristalina Georgieva, the International Monetary Fund Managing Director. And now let's get from Bloomberg First Word News, and for that we turn to Mark Crumpton.
David, Michael Bloomberg ended his presidential campaign today. He spent more than $500 million but failed to persuade Democratic voters he was the best choice to defeat President Trump. Bloomberg says he's endorsing Joe Biden. Bloomberg is the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News. Italy is taking more steps to contain the spread of the coronavirus. The country's education minister says Italy is shutting down schools and universities until mid-March. Meantime, in the United States, the number of coronavirus-related deaths now stands at 9. All but one of those have taken place in the Seattle area. Global infections have risen above 93,000. In Tennessee, at least 24 people are dead. Dozens more are missing after tornadoes ripped across 4 counties early Tuesday. Tens of thousands are facing no electricity, gas, or water, and many roads are impassable. One of the most powerful twisters struck downtown Nashville, flattening buildings and killing 2 people there. Some Super Tuesday polling places extended their hours to allow storm-affected residents to vote. The Supreme Court is signaling a sharp divide in its first abortion case in 4 years. Justices are considering a challenge to a Louisiana law requiring doctors who perform abortions to have admitting privileges at a nearby hospital. The court struck down a similar case in 2016, but that was before President Trump made 2 nominations that shifted the court to the right. Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Coming up, we're going to talk with William Galston of the Brookings Institution about the seismic shift we saw last night in the Democratic race for president. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. Former Vice President Joe Biden appears to have made a round trip from frontrunner to underdog to a strong contender in what looks like now a 2-person race, especially with Michael Bloomberg now dropping out today. We welcome now William Galston. He is chair of the Government Studies Program at the Brookings Institution in Washington, and he's author of Anti-Pluralism, the Populist Threat to Liberal Democracy. He's coming to us from Washington, where Brookings is. So welcome. It's good to have you with us. Give us your sense of what happened yesterday. Was it as big a shift as it appeared to us when we were covering it?
I've been watching and participating in presidential politics for more than 4 decades. This has been the most remarkable week I think I've ever seen, and last night was the most remarkable night. Joe Biden was on the ropes a week ago, and I think he turned himself into the front runner for the presidential nomination last night, with victories in states he was expected to win and in states that he was not expected to win. His victory in Texas was simply astounding.
So what caused it? I mean, was this his changing his strategy or really tinkering with how he's approaching it? Or was it just a lot of the Democratic electorate, at least, was there already, we just didn't recognize it?
Don't blame yourself for not recognizing it, because the evidence suggests that the people who made Biden's victory possible made up their minds at the very last moment within the past few days. But the stage was set in South Carolina when so many of Mr. Biden's rivals for the so-called moderate or center-left lane did badly, withdrew, and endorsed him. Pete Buttigieg in particular, Amy Klobuchar, and certainly Beto O'Rourke's rousing endorsement on Monday night didn't hurt Mr. Biden in the state of Texas. So really the field had begun to clear before Super Tuesday, and although many commentators wondered whether the news would reach the electorate in time, it clearly did.
Is it reading too much in to say we saw sort of a raging centrism in at least a number of the primaries, Democratic primaries last night? Because traditionally you think that both on the Republican side and the Democratic side, you sort of run in the primaries to the extremes, and then you come to the center and the general. But last night there seemed to be a lot of enthusiasm in quite a few states, and it wasn't just among African Americans. You look at, for example, Virginia or something. Joe Biden did very, very well among Caucasian voters as well for sort of a centrist message.
Indeed he did. And I don't think the voters were attracted to a particular point on the ideological spectrum per se, so much as a sense that Joe Biden was the most likely of the Democratic candidates to beat Donald Trump in the general election. I happen to agree with that assessment. Some people, many people in Bernie Sanders' camp don't. In addition, and a lot of the reporting picked this up, people are exhausted by the nonstop pace of politics in recent years, by the constant fighting, antagonism, and there was a palpable yearning to get back to normal. And so when Joe Biden talked on Monday night about decency and dignity in the Oval Office, he wasn't promising anybody the moon. He was just saying, look, I can conduct myself as president in a way that will not exhaust you, will not batter you with news on a daily basis. There won't be constant fights. If you like the way things were 4 years ago, I'm your guy. And it turns out that a lot of people did like the way things were 4 years ago.
At the same time, the contest for the Democratic nomination is far from over. Bernie Sanders is a very strong contender. We have quite a few primaries yet to go, and those primaries seem to be divided up between North and West, or South and West. And there seemed to be something of a geographic division last night between the two candidates. It seems like Bernie Sanders really owns the West, and Joe Biden owns the South.
Perhaps. I think that Biden has a good chance of winning in Arizona, for example, which is lined up later in March. And Arizona may turn out to be the single most important state in the 2020 general election, because if you remember the famous blue wall that President Trump battered into submission, Pennsylvania, Michigan, and Wisconsin, it appears as though Mr. Trump's position is stronger in Wisconsin now than it was 4 years ago, and Democrats will be looking for an alternative to Wisconsin to fill out an electoral college majority, and Arizona seems to be the most likely state. It is also a state with many moderate Democrats, and they have elected one of the most moderate U.S. senators on the Democratic side, Kyrsten Sinema. That's the kind of Democrat who tends to do well in Arizona. So I wouldn't divide it up so neatly into the West versus the South.
Fair enough. And finally, Mr. Gulson, I noticed that in your triumvirate of Wisconsin, Michigan, and Pennsylvania, you left out Michigan and Pennsylvania. Is the likelihood of Joe Biden carrying those states part of why you think that he may be the strongest candidate to beat Donald Trump?
I think there's a lot of survey evidence to that effect, and I think that his position will be strengthened by the resounding victory that he scored last night. People will be more likely to look on him as a potential victor in those two states. Now, Michigan is really the state to watch because Senator Sanders, as I recall, beat Hillary Clinton in Michigan 4 years ago. That was a major calling card. And if Biden were to beat him in Michigan, I think it would be a sign that he's on his way to the nomination.
Yeah, that would be quite something. Well, thank you so much. Really appreciate you being with us. That's William Galston.
My pleasure.
He's author of Anti-Pluralism, The Populist Threat to Liberal Democracy, and he is at Brookings Institution in Washington. Coming up, we'll get another check on the markets. Stocks are rebounding on stimulus hopes in the wake of the coronavirus and Joe Biden's surge. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. It is time now for a check on the markets. Stocks and bonds are rallying today, and Bloomberg's Kaylee Alliance is here to tell us all about it.
That's absolutely right, David. We are one day after that 50 basis point emergency rate cut from the Fed and the Super Tuesday primaries, and stocks are on the rebound. All three major averages here in the U.S. higher by more than 2%. We're actually up by more than 660 points on the Dow. The sixth time in just 8 sessions it has swung by 500 points or more. But of course, risk assets today being aided by the prospect of potentially more fiscal stimulus from governments and stimulus from central banks coming, as well as Joe Biden's strong showing last night. And when you take a look at the sector composition for the S&P 500, we'll see that it's really a broad-based rally. All 11 sectors are higher on the day. What is leading the charge is healthcare, higher by 4%, and it's really managed care stocks, insurers, that are leading the charge. They're among the best performers in the S&P 500 as the market perceived odds of Bernie Sanders being the Democratic nominee are lower. And the other sectors that are outperforming are those that are rate sensitive in a positive way. The bond proxies like utilities and real estate, while financials are being dragged on by the fact that rates are lower. We have the 10-year yield moving lower by about 2 basis points today. We're right around 97 basis points on the yield. In the past 3 days alone, the yield is down 17 basis points, nearly a full percentage point on the year. We are below that 1% level as it stands right now. And of course, that is weighing on the financials. As I mentioned, both the regional banks and brokers getting hit really hard. You have the likes of Charles Schwab down 2.5%, Raymond James down more than 3%. It was actually downgraded at Citi because the analyst over there says low rates provide an existential risk to that company, and like the likes of Comerica and Zions Bank each lower by 3% or maybe a little bit less because, of course, bank profits are an issue with low rates, David.
Okay, thank you so very much to Kaylee Lyons. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we're going to talk with Tom Halverson. He's the CEO of agriculture lender CoBank on how the coronavirus may be affecting farmers as phase 1 of the U.S.-China trade agreement appears to be up in the air. And we're also going to talk with election in Israel with Dov Waxman of Northeastern. Live from New York, this is Balance of Power on Bloomberg Television and on radio.